Distinguished ladies and gentlemen, a warm welcome to this afternoon session where we will be hearing from the CEOs of the Nordic Development Finance Institutions, Swedfund, Finnfund, the IFU, and Norfund. So very happy to have you all with us, and to our dear guests, please be ready to ask some tough questions to our guests, because they will gladly respond during our Q&A session. So let me just begin by making introductions. We have from Stockholm the CEO of Swedfund, Maria Håkansson. A warm welcome to you. We have the CEO of IFU, Mr. Torben Huss from Copenhagen. We have the CEO of Finnfund, Mr. Jaakko Kangasniemi from Helsinki. And we have the acting CEO of Norfund, at least for this hour, Ylva Lindberg. She's also having the job as a Senior Vice President for Strategy, while Tellef is in a funeral actually at right this time. So Ylva, are you are also with us? Can you get your camera on? Yeah.
I'm with you. Sound, and we're doing some technical magic here on our side to also get the video to work.
You will come in last. We will start with Maria, because what we really want to do now, just have a quick run through from each fund to basically talk about your mandate, key countries in Africa, sector focus, so we just get to know you a bit better. So Maria, I would like to give you the floor, and then you have let's see 5-6 minutes now to talk about Swedfund. Please go ahead.
Thank you so much. I really look forward to being part of this discussion today, and I think I just want to start with a few reflections on the consequence of COVID. I think it's difficult to have any kind of conversation like this without reflecting on that. I mean, as you all know, it's a multidimensional crisis. It impacts health as well as the socio-economic parts of society. It's a supply and demand crisis impacting all countries and most sectors. And I think in the African continent, we also see that foreign direct investments as well as remittances are going down significantly. All of this, of course, means that there is a significant lack of capital. At the same time, I think action is needed now to ensure that jobs are protected, value loss is minimized, and also that large populations are not thrown back into poverty. And I can see that as development finance institutions, our additionality and importance is actually increasing. And from a Swedfund perspective, we have during this year focused both on taking care of our existing investments, making additional financing or bridge financing. But as taking risk is part of our role, we have also remained and will continue to be open for business. So we have actually continued with the same pace of investments in this year as we have done previously, and we plan for additional growth in 2021. And I think to build back better for climate and resilience, cooperation is required. So I welcome this opportunity to discuss how we can increase sustainable investments in Africa with my Nordic colleagues and of course with you in the audience. To talk a little bit more about Swedfund, our mission is to fight poverty by sustainable investments in developing countries. Our mission goals are harmonized with Agenda 2030, and we focus on job creation, climate, women economic empowerment, and capital mobilization. We have 40 years of experience of investing in developing countries, and we have a strong focus on sub-Saharan Africa, which today represents approximately 2/3 of our portfolio. And our investment mandate from the Swedish government include countries qualifying for development assistance, meaning low and lower middle income countries, and with a particular focus on fragile contexts. At the same time, we can also do those countries that are called DAC 4. So I would say that for us, almost all countries in sub-Saharan Africa and many in Northern Africa are within our mandate. If we look from a sector perspective, job creation and access to critical services and products like electricity and healthcare is the focus for us. So we have 3 chosen focus sectors, the first one being financial inclusion, where we want to contribute to increased access to capital for SMEs and create inclusive growth and job creation. This can be either through investment in financial institutions, microfinance institutions, or different kind of funds. and we are also exploring venture capital. I would say one example is an investment that we have with Platcorp, which is a microfinance institution in Kenya that provides additional capital to small and mid-sized enterprises. We have also very recently invested in something called African Rivers, which is a fund directed to small and mid-sized enterprises in Democratic Republic of Congo, Angola, and Uganda. The second sector for us is energy and climate, and here we do only fossil-free investments. We are focused a lot on increasing the access of renewable energy, both through larger investments with different kind of developers, but also with direct equity investments in smaller companies working with, for example, solar home systems in different countries. We also are looking into other areas like water, sanitation, and we would also like to explore areas like forestry. And the third sector that we work with is healthcare, and we want to increase access to both health facilities, but also into different kind of medical production. So we invest in hospitals, smaller clinics, medical production, but also into digital platforms for increased access. And I would say one good example here is both that we have invested in larger hospitals and clinics, but also most recently in a maternal care hospital in Kenya, which is a smaller equity investment. So also here we do everything ranging from smaller direct investments to larger funds in this sector as well. If we talk a little bit more about kind of the lessons learned, which I think is also one of the questions that you asked, David, I would say that for us, it's very much around our business model, which is built around impact on society, sustainability, and financial viability. And we normally say that our capital comes with requirements and support to achieve results. And the point in this is that we believe very much in active ownership. And for this, finding the right partner that has the willingness and commitment to work and strive for improvements is very, very important. I think the other part for us is, of course, and I think we all realize that change takes time. And as an investor, we need to be patient and work with and through our partners. And it's extremely important for us to find strong partners with competence in their sectors and, of course, good local knowledge. I think the final part is also that it's important to realize the value of sustainable business practices. I think over time, the realization is that this is not only musts or requirements, but also something very important to create value and sustainability in all dimensions, and also to actually be able to mobilize and attract capital. And here I think that we as development finance institutions have long experience and competence and can contribute with it. So we're willing to take risk. We want to invest with committed partners that share our values, and we want to invest in sustainable business models. So I look forward to this continued discussion.
Excellent, Maria. Thank you for your perspectives. Let us take a short flight over to Copenhagen, and Torben Huss from the IFU. Can you just give us a brief intro? The floor is yours.
Yeah. Hello, everyone, and thank you for the invitation to participate in this seminar. Of course, on, as Maria said, the terrible background of the COVID pandemic, which has turned everything upside down. From IFU side, I would say we also have a very strong focus on Africa, and we don't have any country limitations. All African countries are eligible for investments from our side. We're trying to build up momentum in the least developed countries in the continent. One example of this is co-investment with Norfund on the Horn of Africa Fund in Somalia, which is providing risk capital to small companies and entrepreneurs to grow their business. We can always invest in basically all sectors. We have a strong focus on renewable energy. We have invested more than 600 megawatts in energy projects in Africa. We also have a strong focus on agribusiness and like Swedfund in the financial sector, including microfinance and banks. To give an example of a partnership in Africa in our portfolio is United Exports, large producer of blueberries for local consumption and export, which is operating in Southern Africa, where we provided financing to expand the business, resulting in high production and an increased number of employees. Common for the investments we like to look at is dealing with strong partners which have a solid proven business record, combined with a purpose of creating positive impacts on the businesses and people's livelihood. This is also a case for investment we just did recently in the hospital sector in Egypt and Morocco, where we also teamed up with a strong partner based in the Middle East, which has a track record of providing high quality services in the Middle East and now expanding into Northern Africa. So in general, we prefer business partners with a good track record and a clear business plan and a mission to create impact. Thank you.
Excellent, Torben. Thank you for that. And let's now move to Helsinki and Jaakko. Please, the floor is yours. And what can you tell us about Finnfund's Africa approach, please?
Hi. So on behalf of Finnfund, Finnfund is sort of among the smaller DFIs, but in the Nordic League. I think Norfund is doing more business than we do, but otherwise we are sort of on the same level. It means that we are not among the very large players like IFC and African Development Bank, etc. We typically, our investments are in the, let's say, 5 to 50 million US or euro range. We are seldom in the position of being the one who organizes a big and syndicates a big package, but we sort of are eager to be the one or operate in a very sort of flexible and agile way, so that we can be filling the gaps in the financing that exist. We do about 200 million euros worth of investments per year, and we are half focused on Africa, half outside of Africa. We are not tied to any particular set of small number of countries, so we are open to do business basically in all countries of Africa and almost all sectors. Of course, some of the sort of the banned sectors from illegal drugs to weapons are outside, but basically many sectors. Our primary focus has been for historical reasons more in Eastern Africa than in Western Africa, and more in Anglophone than in Francophone or Lusophone Africa, but we are really open to do business in all over Africa. Our priority sectors are climate or renewable, mostly renewable energy, but more broadly climate investments and forestry and financial sector. We have done some very interesting investments in agribusiness, food chain, and that is an area where we are seeing that we could be doing more in the future. Another sector that we are looking very closely is telecommunications, which in a number of countries is now taking sort of the next step, where it's changing from being voice only and more internet backbone and requiring very large investments where many players are needed. Sort of some examples of what we have done in the renewable energy sector. We are, and I think there we are with all of our Nordic partners, Lake Turkana Wind Power, project. And then in the agribusiness, a good example would be Ethio Chicken, which is a very significant chicken operation in Ethiopia. Maybe that's enough for the introductory part.
Thank you for that, Jaakko. Great. And then we are coming back home to Oslo. And Ylva, please, can you give us the Norfund pitch, please, when it comes to Africa?
Yeah, many thanks for this, Eivind, and thank you for having us and for organizing this Nordic DFI conversation. I've tried to answer the questions that you posed to us by way of introduction, Eivind, and as Maria did, I think it would be appropriate to just start a little bit on the COVID situation. And as you all know, this has impacted both how we do business and how our portfolio companies do business. And as for many of us, our current short-term priorities are really driven by this. We have until now invested around $70 million in COVID aid, and we have another 42 or so in the pipeline. A lot of this goes to financial institutions, both to support them short-term, but also to support them long-term, to enable them to have liquidity enough to keep on lending to enterprises, especially the small and medium-sized ones. I think interestingly, there are a couple of facts coming out of the news these days, and one was from the Wall Street Journal yesterday, which reported that 2 out of 5 Black workers in South Africa have lost their income during lockdown. So it's a really dramatic situation in terms of the loss of livelihoods in our region. In terms of the countries that are included in our investment mandate, I think it's appropriate just to start with our mission, which is to invest to create jobs and improve lives. We do have a pretty specialized geographic focus, where about half of our investments are in sub-Saharan Africa, and we have about a third of our investments in the least developed countries. So this really focuses our work and our investments. 16 African countries are in our core markets. I'm happy to get back to you on details of those if you'd like later on. And we have regional offices also in Accra, in Nairobi, and in Cape Town. In terms of our sectors that we prioritize, so our starting point here is to invest in sectors where there is a significant potential to generate development effects. So a significant potential to, in a quantifiable and significant way, address the Sustainable Development Goals. And that means that we have a theory of change, which is basically just a fancy word to see that when we invest our financial capital and other capital, we need to see that that can have a positive impact on society. And based on that thinking, we have 4 investment areas. The first one and the largest one is clean energy, which stands for about half of our portfolio. Our second one is financial institutions, which is about a third, where we invest in banks, microfinance institutions, and increasingly also in insurance and fintech. Our fourth area is scalable enterprises, where we invest directly into businesses in agri and manufacturing. And then we also invest through funds in this area. And then finally, we have a fourth and new investment area, which we call green infrastructure. This is a new area, as I said. So we're still exploring the types of investment opportunities that we can find in this area. But primarily, it's about waste and recycling and water. In terms of examples, many have been mentioned by friends and co-investors here. So Jaakko, you spoke to Lake Turkana, the large wind farm in Kenya, and Torben, you spoke to the Nordic Horn of Africa Fund in Somalia. And I had the pleasure of visiting that fund about a year ago, and we were out in the field meeting entrepreneurs who had started fishing operations, entrepreneurs who had started farming operations, and including one cabbage farmer. And when visiting him, we talked about pricing and whether this was a profitable operation and how he did his business. And we did a quick back of the envelope calculation, and he said that he could get for a kilo of cabbage, he would get $1. And if you were to do a sort of like-for-like comparison using the GDP per capita in Somalia with the GDP per capita in the UK or in Norway for that matter, that would basically mean one of us paying around $136 for a kilo of cabbage. So it just tells us that there's a lot of work to be done in these markets. You also asked, Eivind, on what a typical partnership with an African company would look like. And I think one of the important things here for us is that we look for opportunities to really partner with companies that have the ambitions and the potential to grow and improve, both in commercial terms and in impact terms. And just a couple of examples here. One is the long-term partnership that we have with Avocado, an avocado producer in Tanzania. Here we've been active on the board, helping the company to identify the right talent, both in terms of farm managers and CFO. We've also developed a business support program where we've supported outgrowers with both technical assistance, training program, and so on. And that's reached more than 2,000 smallholder farms and helping them to produce high quality avocados and access markets in Europe. Another example that I can share is from Sundry Foods, which is restaurants in Nigeria. And here our collaboration has been more on the operational side, so operational expertise, bringing in a board member from Norfund, not a Norfund employee, but on our behalf, who's a veteran operator and can really bring in-depth expertise to operations and back of store issues and helping to improve, working very closely with the board and the owner. So I would say that partnerships, they work really well when we partner with companies to improve on environmental and social aspects, on governance, and also on institutionalizing good processes and systems and succession planning. Finally, I'd like just to touch upon your question on lessons learned or advice to companies that are approaching Norfund for investments. And here I'd like to make a couple of points. So one is the typical investment size for us is between $5 to $15 million in the sections that we mentioned, the sectors that we mentioned. And this is primarily equity, but we also do loans and funds. The second point is we do have requirements on environmental, social, and governance issues. We put the IFC performance standards as our gold standard in our investments. But that does not mean that everything should be perfect at the beginning, but we do need to work together to improve in the direction of these standards. In addition, I think it's helpful for companies to think about diversifying their investor base to minimize time spent on raising expansion capital. So to make sure you don't just have one investor, but a diversified investor base. And that way you can help the business fund its expansion plans, which is often a challenge. I think the final point on what companies should take notice of when approaching Norfund is that we do have a development mandate, but that does not mean that we come with soft money. So we can only deliver on development mandates by being a commercial investor. We can take risks where others can't, but we do invest in a commercial way and we are a professional investor. I think this also connects well with the fact that we are not a passive investor, we are an active investor, and we will be setting pretty high demands in terms of growth and development for the company. So I think just to wrap up, it's about partnerships and it's about collaboration. We do have a development mandate and an ambition to create jobs, but we think that that can only be delivered upon at large scale and in a sustainable way if we have profitable business models over the long term.
So much for that, Ylva. Great. I just want to quickly pick up on your regional presence, because you mentioned, Ylva, some of the places where you have offices. But can you just have a very quick round where you tell us where your offices in Africa are actually based? So, Ylva, you said Nairobi, you have a new office in Cape Town, right? And you are in Accra. And Maputo, you moved that to South Africa now.
Yes, yeah, so we have 3 offices in Africa. Our Nairobi office, and then our Cape Town office, which covers Southern Africa, and that we moved from Maputo earlier this year. And then our 3rd office is in Accra, in Ghana.
Okay. Maria, how is that with Swedfund? Are you based in the same places, or?
We have an office in Nairobi where we have our staff. So we have both local staff working in the region, and then the responsibility for our healthcare sector is actually also fully located in Nairobi.
Nairobi, okay. Jaakko, in Finnfund, where are you based on the continent?
We don't have local offices in Africa or even anywhere. So we operate from the Helsinki office, but we travel a lot and or used to travel before the corona, and then we work through our network, both sort of private equity managers and the banks that we collaborate with.
Good. Torben, how is that with you in IFU? Where are you?
We also we have an office in Nairobi and one in Accra, which we've had for a long time. We've had other offices in the region which have been closed down and opened in different locations. I would say we do have increasing focus on West Africa. There's a question to that I see from, I think one of the problems very fundamentally has been sort of one of language and business culture being more difficult in French-speaking areas, but we have hired new French-speaking staff in our office in Accra, and we are actually have a good pipeline of projects but actually also completed projects in West Africa.
Can you others also just comment on that, the West Africa question? If there seems to be more focus on East Africa, one guest is suggesting here. So for Maria, is that the case for Swedfund? I mean, you have your office in Nairobi, obviously, but
of course, if you have an office in Eastern Africa, that's where we work from, and that's where we have historically had the largest part of our investment has been in Eastern Africa and in Southern Africa. We are also, just like Torben saying, interested in doing more in Western Africa, and I think to some extent you make a choice of an area that you find relevant and you start there and you build from it, and I think also the language part is, of course, a little bit may have played in, but it's interesting to see that we have the same across all the DFIs, but I think many of us want to do more in Western Africa.
I want to ask you also, do you see, I mean, is there a lot of competition now for you when you're finding good projects? Is there a lot of competition from private equity companies? I mean, how do you see that? Is there a competition for the good projects? Maybe Jaakko, would you like to?
There is both competition and collaboration. In most of our investments, we collaborate with the others. For instance, the wonderful Africa approach that was mentioned, we are also there, and of course, like Turkana is where we are all, and there are many others. So we do collaborate with each other, and we do collaborate with private equity funds, and we also invest through private equity funds. So it is like I would say in modern business in general, that at the same time we can be in some cases competitors, but we often are collaborators, and especially in the situation like with the in the case of a rapid downturn, like now during and after Corona virus, there is a risk that or possibility that many of the private financiers, for their own reasons, cannot move, and it can happen. I remember very well that after the financial crisis, it happened that many projects that we were working on just could not get the funding together, and could not move forward. But then there were others who had been, I would say, maybe slightly more sort of commercial and standard and in a way less path-breaking, and would have been normally financed with banks or by banks, but that could not find bankers to finance them after the financial crisis, and then they came to us, and we may see the same thing in connection with the coronavirus situation now.
Can I comment as well? And I can only agree with you, Jaakko. I think it's both to some extent competition, but mostly I think it's a collaboration. And I think you can also I think there's two things. One is that I do see a hesitation from private capital to a larger extent than what we did before the corona crisis. And I think that has to do with risks, of course, and an uncertainty about the returns. I think it's natural. And I think that adds, I think there's a question in the flow about taking risk and what that means for a DFI. And I think it's very much actually about us being additional and saying that we still want to invest because we believe in the long term of this and we are willing to take a longer term bet. I think that's an important part of this. Then I think if you look on private investments, I think there's also a life cycle part that you can bring into this. If you, for example, look into renewable energy, I think the role of a DFI is maybe to be part of building up something. Well, if you can get more pension capital to actually be under the part of asset management. So I think you can also look upon it from that aspect where we are probably willing to take a larger risk during the project phase, and then we can exit and then there can be an asset management. So I think there's many dimensions to this.
If I can a couple of things to this. Just looking first on the West Africa point, we will be working more towards West Africa from our Ghana office. And I agree, there may be a language barrier. We've just recently hired a new colleague, French-speaking colleague, so that will certainly help to do this in some way. And just, I think it was late last year, we made an investment through our platform Arise into EcoBank, which is a bank that also has significant presence in places like Mali and Niger and so on. Then on the competition and collaboration question, it's maybe a bit of a cop-out, but I agree with both Jaakko and Maria. It is both, of course. But I think more collaboration than it is competition, especially amongst us as a DFI group. But a couple of things just to add to that, which is I think in terms of competing with private capital, I would say more that our role is to mobilize private capital, to mobilize other investors to do investments that might otherwise be unavailable to them. And this also goes to one of the questions that was in the chat just now. What kind of risk do we take, perhaps that others don't? I think it's the fact that we can go in and de-risk in some way by having project finance early on, by having more of an understanding perhaps in terms of the regulatory environment. We know that being government-owned actually helps in de-risking some of the political aspects because we'll have the support of sort of the Kingdom of Norway behind us in some areas. So there are several areas where we can help in that respect. And it really does help to mobilize more private capital into these markets, although that is super difficult. And I think the other thing, building on what you said, Maria, is the ambition to recycle capital, that we want to go in and be additional and get projects up and running. And once there are other private investors that can take on these projects, it's our role then to exit and then reinvest the capital into new projects.
It's not long since you had one of Norway's largest pension funds, KLP, talking about how they have made between 10 and 12% return on their investment that they have co-invested with Norfund. So it's just a fantastic example that you can really show off some great results by co-investing with the DFIs. But let me go back to companies that would like to partner with you. Can we three advice from each of you? How can they come best prepared and knock on your door? Maria, if you would like to start, and we can do a quick round on that.
Yeah, I think like this. I mean, some of those things we have been on to when we choose who to invest with. It's really the partners. I think you need to have knowledge on the sector that you're working with. I think that's extremely important, and you need to have a good business plan that you can present. Then I think for us, when we want to, as part of our model, we really want to find someone who believes in that we together can actually work for a change. And you have to believe in the importance of sustainability, as I said before. If you don't do that, then I think we are not the right partner, because we will put a lot of requirements on the capital that we actually provide. So I think to be well prepared, to know your sector, and then you have to believe in the importance of sustainability and actually be part of that journey. I think that's really important.
Thank you, Maria. Torben, what would you say?
I fully agree. I mean, there need to be partners in the project which have documented experience from the sector and with a clear business plan and a mission to create impact. I think that's the most important thing. And I think it's one has to realize it's also difficult for institutions like ours to approach very small investments from where we are sitting, even though we do have regional representations. And that's why we do have this focus on investing also in local financial institutions, and that way provide capital which can access to small, medium-sized businesses in Africa. I would also just this on the projects which was mentioned before. Just mention, I mean, if we compete or not. I agree with the comments, but I think the challenge we all have is the lack of investable projects, of the larger infrastructure projects. I mean, we have the Lake Turkana experience, all of us, and we would like to do more of those projects, and that means we do have to, like Ylva said, invest more in project development and take project development risk early on, and have resources for that.
Thank you, Torben. Jaakko, what would be your advice?
No big surprises. My colleagues have said all the right things. So you have to have done your homework. It needs to be a credible business plan. We would love to see some success earlier in your career, or somebody at least in your team having done successfully the same business in another country, or this or some related business in this country. We cannot be the sort of a very hands-on sort of a venture capitalist financing projects where basically we are on the driver's seat, and we monitor every move that you make, since we are not there. So our sort of first line of defense against doing stupid things is that if you lose our money, you first lose your own money. So that we would like, we prefer cases where we are not the one who is taking all the risk, but we are sharing the risk and making it possible for you to go further than you otherwise would go. And yes, we want you to be in a way committed to running your business very responsibly when it comes to sort of labor conditions or environmental issues, etc. You don't need to be perfect on day one, but it needs to be a clear vision that you are going to run it in a professional and in a very world-class way going forward.
Good. Ylva, anything you can add on to what has already been said here when it comes to advices from you?
Yeah, so I won't repeat. I agree with much of what's been said. I think from our perspective also, it's the sector focus that we have. We have 4 investment areas that we focus on, and that's where we're looking for investments in the $5 to $15 million range. So not too small, but most of the time not too big, but we can take larger tickets. We're always a minority investor, so we won't go in and take a 60-70% share in a company. That's not what we're set up to do. So I think those are some key facts and boxes that need to be ticked. Another aspect is we rarely take technology risk. So that would be more for a venture fund than for an investor like ours. And just to underline what I said earlier, that we do have a development mandate, but we are a commercial investor. So soft money is not where you don't come to us for the soft money to be direct. But then finally, I think it's also about the looking to partner with a long-term investor, looking to create long-term value and sustainable impact on society. We need to share that ambition.
Good.
Could I have in a way short marketing speech on behalf of all of us? Namely, comparing us to the 2 main or the large development banks, IFC of the World Bank Group, African Development Bank, EIB to the extent that, and EBRD to the extent that they are coming to Africa, finance private sector. Early days for them. I think that the main thing to keep in mind is that what they are doing is very valuable. They are really sort of designed to do mega projects, very large projects. They have very demanding and complex procedures, which is what is needed if you are doing whatever sort of oil pipelines from one country to another, or something very large, huge infrastructure investments with very large potential adverse social and environmental impacts, etc. So you need to have very heavy machinery to do follow all safeguards and so on. It gets extremely complex if you are doing something smaller and you are dealing with these big players. So I think that if you are doing something that is, as Ylva said, in the sort of the 5 to 15 million range, then I think that one of the smaller DFIs would be a more flexible partner for your investment than the big players would be. They are very much needed. Those huge infrastructure and other investments are needed, and normally that's not our cup of tea. Or maybe if we participate, we have a sort of a additional or supplementary role there. But then when it comes to sort of mid-size investments in and companies in sort of our range, I think that we could be more flexible and move faster than the very largest investment the development banks would.
I think that was a good pitch, Jaakko. Well done. This is a yes/no answer. Tourism. Maria, are you investing in tourism?
No, not directly. Only through, in that case, it will be through a financial institution or through a fund, but we wouldn't do it directly ourselves.
Yeah. Ylva?
We have 2 investments in Kenya, one in Asilia and another one in Basecamp Explorer. And they're both companies that have been struggling, of course, very much in the wake of the COVID pandemic, because their revenue base basically disappeared overnight. So we've supported both of those with emergency funding. And I'm glad to say that we had some news the other day from Basecamp that it seems the local market is starting to pick up. But we by no means expect this industry to be back in the short term or even medium term. So it's definitely challenging days. Yeah.
Torben,
we are happy to hear that, because we also provided emergency financing to Asilia. So that was the good news of the day then.
Very good.
For many poor countries and poor communities, tourism is a very significant source of foreign exchange and employment. So many countries that we sort of think traditionally that they are coffee producers or that they are tea growers or they produce cocoa. In fact, the number one source of foreign exchange and employment is tourism. So it needs to be taken seriously. We did one tourism investment just before the or approved one tourism investment just before the coronavirus. Now, unfortunately, that project is not moving forward right now because of the lack of tourists and so on at this point, but we hope to get back.
Good. While the guests may consider some burning issues now as we are approaching the end here, I would like you to have just a quick round, describe, a dream investment project. If someone came to your office, describe this would get you really enthusiastic. And it has to be on the African continent, obviously. Maria, what would you say?
I think like this. We talked a lot about risk and the importance of development, but we haven't talked so much about technology. You were into telecom, Jaakko, and before I joined as the head of Swedfund, I was actually the head of Internet of Things at Ericsson. And I believe that technology can really be a part of leapfrogging and closing development gaps. I think we have seen some steps in now during the pandemic. I think we have all gone more digital, maybe than we want to, but I think that also poses a huge potential. So for me, a dream investment would also be where we can find local sustainable business models, because I think it's very much around that. It's not around the technology per se, but it's how you utilize it and make something out of it that actually serves local needs. And that could be in either it could be like in renewable energy built on blockchain technology. It could be something on healthcare. I like that a lot. Anything that you can provide either medication or healthcare access on a digital platform. For me, to be able to find that, because you have the innovation, it's built on local knowledge, and then I think the scalability per se in that, I think that's an immense opportunity. So that would be my dream investment if I get to pick only one.
Great, thank you, Maria. Jaakko, what would you describe as a potential dream project?
I think it would be the type of project that, independent of whether it itself employs lots of people, that it sort of links to either as a sort of a supplier of some inputs or as processor of the output. It links to a very large number of people. Could be farmers, could be consumers, could be let's say small scale retailers, and so on. Sort of brings modern technology and science, modern things to improve the productivity of lots of people, not necessarily in the company itself, but in related parts. The agri project, Ethical Chicken that I mentioned, it is an example of in a way this concept, but there are others. We have one in sort of linking farming to consumers. In that space, we have another investments which I don't think I can mention yet, since it's not publicized yet. But that sort of fits that picture.
Thank you, Jaakko. Ylva, what would be your dream project?
So I think firstly it would be where you see that a business grows and prospers in a way that wouldn't have been possible without patient long-term capital that we bring to the table. I think that's one aspect. And the other one would be that it creates substantial and measurable development effects. So say, it creates jobs and more people get stable, permanent and safe jobs where you used to have insecurity. Then I think it would also be that this is done in a responsible way, that you've seen substantial ESG improvements. So not that you started in a 100% responsible company where everything was good, but where you had some challenges along the way, and then you could really work to improve those. And then I think I have someone I've worked with earlier who says, the question that we really need to ask ourselves if we run a company is, what is my unique contribution to a world of 9 billion sustainable lifestyles? A dream investment would be a company that then develops a clear idea on what that unique contribution is. And then I think no dream investment is a dream investment without really solid returns.
Good. Thank you so much, Ylva. Torben, you have 1 minute to describe your dream project now before we close off.
Well, a dream project is one, I think, that addresses both human development challenges and also reduces ecological footprint per capita. So I have a particular liking of renewable energy projects, which both give local societies opportunity to prosper and required infrastructure, and at the same time promote reduced ecological footprint we have on it. So that's a nice investment. Water is also something we're very much looking into right now.
Thank you, distinguished speakers. Thank you so much for sharing your insights and experiences. Thank you to all the guests who have been listening in to this discussion and contributing in the chat. Now in 10 minutes, there will be the last plenary session panel where I will be discussing the future outlook. So please join us for that as well if you have time. And thank you to all Nordic colleagues for being part of this. Really appreciate it.
Thank you for a good discussion.
Thank you. And thank you to all the ones that have provided questions and comments.
Yes.
Thank you very much. Thank you for those in the chat. So thanks a lot for all of that. Bye.